Hey guys, and welcome to another video. Today I'll be giving an update on my M1 Finance portfolio. As you can see here, the value of my portfolio is at $1,230.23. I have a total return of 0.31% and a gain of which equals a gain of $2.93. Something I did want to point out was this. So my market gain is $1.60, but I have earned dividends of $1.33. I thought that was pretty cool that I already have earned dividends. I wasn't expecting any dividends of any kind or to earn any dividends since I only opened my account about less or a little more than 2 weeks ago. So that was pretty cool. But overall, the portfolio, the slices have been doing okay. But before I go into the slices, I wanted to talk about something. I want to talk about my deposits. So when I opened my account, I started with $500. My first video, I showed what stocks I added there. Some of them were REITs, others were ETFs. Just kind of dividend based stocks. Then I added my dividend aristocrats with $200. Then I added another $110 or so for my value stocks. But the original plan was that I was going to invest $30 a day, which would equal $150 a week. But then I kept thinking, well, you know what? I could probably do $40 a day. But then I thought a little more, and I thought some more, and I thought, well, you know what? If I really push myself, I can do $50 a day. And so I decided that from now on I'm gonna start investing $50 a day. So last week, I did 40 on Monday, automatic deposit, 30 on Tuesday, and then I did 50 the following days. And I just thought, well, I need to get very serious about this. So I really want to get serious about investing. I really want to make my money work for me as much as I can. Right now, I think is the best time to do this, at least for me. Now, if you're not able to do, $50 a day, or you can only do $50 a week, or even $50 a month, I don't know. But at least for me, that's something that I really want to push myself to do. Now, I'm not saying I'm gonna do this forever or that I'm gonna do it for a very long time. I at least want to try it for like a year or so. Because right now, I don't have many responsibilities going on. I don't have that many expenses. I'm currently single, don't have a family or anything to support. Some people that may be watching this video, maybe they have a lot of responsibilities. Maybe they have family they gotta support, and that's fine. You gotta pay your bills. You gotta take care of your responsibilities. But sometimes I just wanted to say, sometimes we gotta make some sacrifices. And in my case, I decided to sacrifice some things. So yeah, it would be nice to have the extra $100 in my paycheck, which is which as it is, the $50 a day is already a pretty big chunk of my paycheck. I thought, why use this money in something that's not gonna make me much money, or that's not gonna be that beneficial for me later on in the future? Why not just sacrifice a little bit today, so later on I could enjoy it a little more. And that's my reasoning behind this. And again, I'll keep you updated. If I decide to change my mind, if maybe there's an emergency or something like that, I might have to cut back a day or two, maybe a month. But yeah, that's one of the major updates, at least for my portfolio. So the way I have it set up, I schedule so that every day of the week, I have $50 going into my M1 Finance portfolio. Why am I doing $50 a day? The main reason I'm doing it is for the dollar cost averaging. And if you don't know what dollar cost averaging is, it pretty much just means that you deposit the same amount at a specific time, whether the stock is high or the stock is low, you always deposit the same amount. In my case, that's going to be every day. So for example, let's say Apple stock, let's say on Monday, it's $220. So I buy maybe $5 of Apple stock at $220. But then the next day, the Apple stock drops to $210. So that next day, when I buy those $5 of Apple stock, I get more money. I get more stock for my money. So in the end, it averages down the cost of my investment or of buying the particular stocks. So that's the reason I'm doing that. But yeah, so that's the way I have it set up. So every day I'll be depositing $50 into my account. And again, and if that's something you're not able to do, don't do it. If you have responsibilities, you gotta do. You can't just, you don't have $250 to spare, which that's fine. Whatever you have, though, I'll advise you, and I'll always say just invest whatever you have. Whatever you have is better than not doing anything. Okay, so that's one of the major updates in my portfolio for me. So I want to start investing more aggressively. But the next thing I want to talk about is the two stocks that I added to my portfolio. But before I talk about that, I just want to go over these pretty quick. So my growth and value portfolio, or stocks, or my growth and value pie, did okay for this week. You can see here my Facebook, my Microsoft, all of them except Apple and Amazon were in the greens, and FedEx and UPS. I know FedEx recently had a disappointing earnings call for the investors, so a lot of the stock was sold off, but I'm sure they'll be fine. The next one I want to talk about is here the dividend aristocrats. Now, the dividend aristocrats have actually, ever since I started buying them, they've just been doing great for me. So I guess that goes to show you that the slow and steady, reliable stocks, they're the ones that get you those wins, huh? But you can see here, all of them here: Johnson and Johnson, Colgate, Pepsi, Lowe's. All of them were in the green. The only ones that weren't was Walmart, McCormick, and Cintas. But overall, they've been giving me pretty decent returns. The ones that have been struggling, I guess, or have been has been the dividend pie. All my ETFs have been doing good since they pretty much just track the S&P 500. The Master Pie from M1 Finance has been doing pretty good. But the rest, the REITs and all these other riskier investments weren't doing that great, but it's okay. The only reason I added any of these stocks is for their dividends. I didn't really add them for their capital appreciation. But I also didn't add stuff that was gonna depreciate all of a sudden. I tried to choose stocks that sure they weren't gonna appreciate that much, but they pay pretty high dividends. So try to find a balance there so that I didn't completely lose my money, but also that I was getting as many dividends as I could. Now the ones that I added here to my portfolio right here. Now the two stocks that I added, and I'll talk about them very briefly, is the Ford Motor Company and General Electric. So first I want to talk about Ford just very briefly. Ford's got a market cap of almost $40 billion. They get a PE ratio of $5.83. They got a dividend yield of 6.35%. As you can see here, the overall history of Ford really hasn't, I don't think it's ever been like a growth stock or anything like that. But at one point in the late 90s, it did trade at $31, but then it just came crashing down. I'm assuming during the dot-com bubble. But you can see here, it's just always been struggling, and even during the financial crisis, the stock came down to $2, and I actually kind of do remember that. Then it kind of picked back up, but it's just never been one of those stocks that been very high, that haven't traded for much really. Right now it's trading around 981 as of the making of this video. Again, I just added it for its dividends, not so much because I believe in what they're doing or their vision. They tried to recently get into China, it just hasn't been working out that great for them. But that's the first stock that I added here. The next stock that I added just for the dividend is General Electric. So GE, ticker symbol GE. They're one of the big. They're a pretty big company. They're a big conglomerate. Their market cap is at $105 billion, and they get a dividend of 0.378%. Also, you can see here, look at their max history. They just never been one of those high traded stocks, one of those high value stocks, you could say. Again, and just like Ford back during the early 90s, even into the early 2000s, they were trading at a pretty high valuation. At one point, trading for $57.81. But again, I'm assuming with the dot-com bubble, they also crashed. Then they started recovering over here. But then they were also one of the big companies that got hit really hard during the financial crisis. So, and then they started recovering, but then they just, again, they dropped off again to their current valuation of $12.17. But yeah, these are the two stocks that I added. Of the two, I believe actually GE has the better chance to turn things around and they can do more. I know their new CEO has big plans for the company. He wants to spin off several of the sectors of the company just to try to focus in just the ones that make them the most money. But who knows what's going to happen there. But as of right now, the only reason I added them was for their dividends, not so much because I believe in them or anything like that. The moment that I hear they're not gonna pay their dividends, I'll probably just drop them. And I think that their dividend is pretty safe, because if we look at here at their financials, GE, for example, has $116 billion revenue in 2014, 115 in 2015, and 120 in 2016. So its revenue has been increasing actually year over year. However, its profits have been decreasing year over year. So in 2014, they had $27 billion in profits, and then 25 the next year, and they went down just a little bit in 2016. But then in 2017, they only had revenues of $14 billion, which, still $14 billion. But for the size of a company like GE, another reason I think they can keep up with their dividend payment, they only have a payout ratio of 50%, which means they only pay out 50% of their profits out in dividends. So that means they still got some more room to grow, which I don't really think they'll be growing their dividend anytime soon or as much. They actually recently cut their dividend not too long ago, but they're still paying a pretty good dividend overall. Ford is the same way. Their payout ratio is only, if we look at here, their payout ratio is only 35%. So they definitely have enough room to grow to pay out that dividend. But yeah, that was the main update that I have here from my portfolio. The only reason I added those two stocks was for their dividends. Really, the moment I hear they're not paying dividends or anything like that, I'll try to sell her off as quickly as possible, because they'll probably start the shares going down even lower. But yeah, that's all I got for today. Just I'm just gonna step up my game with the investing, and like I said, I really want to get serious about this. I want to grow my portfolio as quickly as possible. Now I'm not trying to look. I'm not looking for like quick money or anything like that. I know it's gonna take some time, but I believe that more money that I can invest now, the longer that it grows, the more money I can have in the future. So that's one of the main reasons I want to start doing this. Also, and then those two stocks, I don't really recommend them or anything like that. If you really want to put them in your portfolio, go ahead and look them up. But again, I just added them for their dividends. If you like the video, go ahead and give it a thumbs up. If you didn't like it, give it a thumbs down. Leave a comment or two. Let me know what you didn't like about my video, what you liked about it. Any stocks that I have in my portfolio that you think they shouldn't be there, or any stock that you think I should be looking into to add into my portfolio. I'm open to listening to any new suggestions. And there's already people leaving comments in my videos, which is, I didn't really expect that many comments in my videos anyway. I didn't really think that many people would watch. I only have 3 videos so far, and they already have over 100 views. So that was pretty cool, I thought, considering I was only expecting around 10 or 20 views, maybe. But yeah, just thanks for the support, for all you guys liking my videos and commenting on them. I'll definitely try to do my best, and I'll try to up my quality of my videos, and maybe try to talk about better topics. But again, I'm just like most of you out there. I'm trying to learn myself, and I'm just, the only difference, I'm just documenting my journey so that you can see what I'm doing. And but yeah, that's all I'm doing, really, just kind of documenting my own journey. And as I learn, I'll try to teach others what I learn. But anyway, thank you for watching, and I'll see you in the next time.